Hey guys, I've got my pal Todd Sullivan on the line from Value Plays. Todd, what's happening today?
How are you? A little exciting day in old GGP, huh?
I'll tell you what, my friend. I told my wife when I first saw that you'd be down to stay on the sofa, but she explained I should carry the sofa out to the sidewalk and both of us could stay on it.
Yeah, I expected something over the long weekend, but for whatever reason, something must have got held up, so it waited till this week. Based on everything they had been doing in the past with accounting and paying people in advance, it was just a matter of days before this actually happened. So
yeah, you told everyone this is what to expect and this is what's coming, and as usual, you were well ahead of the pack.
Yeah, and they had a conference call today, and a couple of things came on the conference call that I was surprised. Earlier, there was a report about Boston's Faneuil Hall and the Inner Harbor and Baltimore properties going up for sale, and they had bids for them.
I heard they were going to throw the Red Sox in.
Yeah.
Nobody would take them.
Yeah, but apparently the same problem affecting GGP was affecting the potential buyers, is they couldn't line up financing for those properties either.
Right.
Even though they're fabulously profitable, they're fabulous cornerstone properties of the organization.
Nobody's loaning money.
People couldn't get the money for it. It wasn't that there weren't willing buyers. There were plenty of willing buyers and plenty of willing buyers who were willing to pay money for it. They couldn't get financing for it. So I think that kind of bolsters GGP's case that, look, this isn't an operational issue. There's no credit to be found.
Well, that's what we've been talking about for a long time now, is we don't think there's credit out there for anyone.
Yeah, it's not. Banks aren't willing to take risks, especially multi-billion-dollar risks right now. They did say something interesting. They did say that they've had interest from several parties, both institutions and private, about funding cash for GGP through equity.
Right.
Which is. It's good for two reasons if you're a shareholder. It's good because you have people, especially the private equity group and mutual funds, who are interested in being part of GGP, and they're interested in taking stock for it.
Right, so, not debt.
Right. So if you're a current shareholder, now you have private equity wanting to come in, and obviously they would get a discount to the current share price. There'll be a dilution. But, right now you're trading at pennies on the dollar. Go ahead and dilute it 50%. This was a $40 stock less than a year ago. Dilute it 50%, you get yourself a $20 or $15 stock if you're buying it for 40, 50 cents a dollar.
I have my hands together in prayer for it.
Right? What's the complaint? Dilute it 80%, all I care. Then it's a $4 stock. But,
That's right.
49 cents a share for it. Go ahead, So, there's lots of things going on. The COO, I believe, was the guy on the call. He said that, they didn't see selling any properties, that liquidating or selling properties wasn't the plan, that obviously there might be the occasional property here or there, but, for people who are thinking...
It's not a fire sale where they're just trying to liquidate. All it is they just need to be able to find the financing.
Absolutely. Refinance the debt. They're going to extend maturities. They're going to force some people to refinance. Some old unsecured creditors might get some equity for the debt. That was broached on the call, too, which is fine. That's a dilution of current shareholders. But, again, when you're paying pennies for it, you're looking for dollars in the long run. And a dilution from an unsecured debt holder, which the majority of the debt that's outstanding right now,
okay.
That's okay too. The end result of that is the operating business, when it comes out of bankruptcy, is far better. So you have less debt service on the back end. And another thing that came out is the properties that they've been able to extend maturities on over the last 6 months they worked on. Those were not included in the filing today. So that's going to provide some extra value for shareholders.
They're outside of this.
Yeah, they're outside the process. So all in all, there was nothing that changed my opinion there today that they said that made me think, well, maybe this is something I should get out of.
No.
If anything, the fact that they have people wanting to buy equity right now leads me to believe that even other people who are looking at it see that, we might be able to get some value of the equity even after the bankruptcy goes through, even after the process has gone through the courts.
And it's diluted, but it's still, as you say, you're getting dollars for pennies.
Exactly. And I don't know where it's going to open when it opens there today. This may be one of those things where it was trading for pennies on the dollar because people were worried that
just
they weren't going to.
But this is it.
Right, that they weren't going to file Chapter 11, and maybe this was going to drag on for a year, or who knows what was going to happen. And now that they have, people may jump in. I don't know. My hope is that it craters when it opens, and I can pick some more up.
Well, I'll tell you what, my friend, I've learned very well to follow what you do. Guys, if you're watching this, Todd is one of the smartest guys that I know, and I've been giving you links to all of his great research and insight, and I think he's the only one that has this whole insight so far, and you've been ahead of the curve the whole time, my friend. Come back to the website at WSMCO.com, and there'll be links there. And I follow Todd night and day. And I really appreciate you joining us today, my friend, for this update. Now, what do you think? Well, what's happening with housing, pal? I actually took a loss on some of my SRS today because I could not believe that it's just real. Everything looks so terrible for it, and the housing shorts were down.
Yeah, I saw that you did that. I think long run you're going to be proven right, and I think right now the market is just being pushed higher by will, not by fundamentals. And, like I said last time we talked, that can happen, and that can happen for a while, but eventually the true value of something and the price of it always end up meeting, and eventually it's going to come down to earth. Housing is dead for the rest of this year. Anyone who thinks otherwise, I think it's just dreaming. And I think the CNBC had a piece on it today that they were surprised that the numbers had dropped for new homes. And
yeah, surprised, right? It's like disingenuous, right, pal?
I was just mystified. It's either they're trying to build people up and lying to them, or they just don't get it. And either one of those scenarios is really
or
bad.
Dangerous for them to be disseminating information. Either one of those.
I don't understand how they could be surprised by that.
Yeah. Guys, Todd has a great piece on this called CNBC Doesn't Understand Housing. And you can go to valueplays.blogspot.com or come back to the website, and I'll link through to his website. I read everything that he writes. Todd, you're the most well-thought-out guy that I know, except for that Red Sox delusion you suffer from.
Everybody has their flaws, I guess.
Oh, boy. You are a gentleman as well, my friend. Thank you so much for joining us and sharing your insight. And this just looks like a perfect case to me of exactly what you said was going to happen is happening. And I just hope you're right the rest of the way out the door to the Bentley showroom, my friend.
Yeah, exactly. I hope it's not one of those things. Be careful what you wish for; you might get it. But I'm going to hold. This is going to take a while. This is going to take a while to back up. There's going to be lots of ups and lots of downs. But you know what? I think as things start to shake out, you got. I'm sorry, but you got Bill Atkins providing the DIP financing. He's a bondholder and a shareholder. He's sitting at every table, and they want everyone to be made whole. That's the goal in this process, and there's a way that can be done. So, I think if they can work it out, and if they do, it's going to be a spectacular return.
Well, I'm sure hoping so, my friend. And thank you very much for sharing all of your hard work and your research and insights with us. I'll talk to you again soon.
Thank you, Doug. My pleasure.
Hey, guys, come on back to WSMCO.com. I follow everything that Todd does, live, free, real, on stock twits, and I read everything that he writes at valueplays.blogspot.com, which I'll link to. I only do every day because I just think he's fantastic. Make sure that you come back and read what he says. He's the most well-thought-out guy I know. Thanks very much.